being an entrepreneur is not an escalator. It's more like this. And these bits down here are near-death experiences. And some people should go work at an accounting firm and start as a junior analyst and become CEO of Ernst & Young in 30 years. That's an awesome, amazing career path. Being an entrepreneur is polar opposite. And some people just don't have the temperament, the constitution, so to speak, to deal with these near-death experiences, because that might lead to nervous breakdowns. But that's what being an entrepreneur is like.
Hi, I'm Elise Tan, and I'm your host for this episode of Hard Truth by Vertex podcast. Today, our episode is really special because firstly, this is the first time we are doing it during a live event. And secondly, we have a really special guest, Jack Selby. Jack Selby is a member of the PayPal Mafia. Jack Selby is a venture investor and independent film director. He joined PayPal as an early employee and served as the Senior Vice President of Corporate and International Development. Currently, Jack Selby serves as the Managing Director for Peter Thiel's family office, Thiel Capital, based in Los Angeles. I think not many of us knows that Vertex Ventures was an investor in X.com, which later merged with Confinity. Confinity is a competitor of X.com and has a money transfer product called PayPal. After the merger, X.com was renamed PayPal, and this is what we know as the pioneer in digital payments. So we hope you will enjoy today's episode with Jack Selby.
So I will first start with, what brings you to Singapore?
So it's great to be back in Singapore. Thank you all for hosting me. I ran the corporate and international operations at PayPal, and our Asian headquarters was based here because of Vertex. We had Vertex and Temasek and DBS and SingPost and Singtel and basically every corporate investor you could have back in 2000, 2001. So I used to spend a lot of time here. And the reason why I'm back, I came back briefly last November there was a big Bloomberg event, and there was Singapore FinTech Week. So I was here very briefly, but I realized we need to spend a lot more time here because this place seems to be booming. So I flew in this morning on the Red Eye from New York.
Thank you. Singapore is quite a distance from the US. So why? How did PayPal know about Temasek, the investors in Singapore?
Sure. So as part of our international strategy, we wanted to find banking partners in all the different markets that we first wanted to explore. And so we had 5 or 6 large banking partners in Europe. We had a banking partner in Japan, and then obviously we had DBS as our banking partner here. And so Singapore, to its immense credit, was very proactive in reaching out to us. I think the group is called EDVI, but they were very proactive in helping us find an office and meet other people and just different ways to collaborate. And so those folks were really the ones that helped kind of drive the process and helped us establish a very large presence here.
Yeah, good to know. We are proud to have supported X.com and then PayPal. So, since we have started with kind of like the year 2000s era, so I want to kind of compare the then and now, right? So I think you have been through quite a few cycles. You mentioned recently 3 business cycles, right? Since then, lots of experience from both the entrepreneur and the investor side. So how would you compare, the year 2000 and now? What are different?
Yeah, so I turn 50 next month, and so I'm old enough to have seen a few cycles at this point, and it's not different this time. And so for us, when we were doing PayPal, actually the majority of the time of our company's existence was after the dot-com crash in March of 2000, and actually we closed in our Series C, which is a $100 million round, which doesn't seem like much now, but it was quite significant back then. We closed on it literally the Friday before the market crashed that following Monday. So we got very lucky. So the way it's different now is that the cycle is definitely turning down. This is one of the hardest capital raising markets I've ever seen. It might be the hardest. And I think it's particularly difficult because unlike 2000, coming out of the great financial crisis in 2008, you essentially had 13 years of very easy, almost free money. And so that easy free money has kind of gummed up the works. And so what would have otherwise probably been more of a V-type correction, and we'd already be seeing green shoots in an upside cycle turn, all this free money essentially is gummed up the works where it's more of a U than a V. And I think because of that, it's going to be more of an extended recovery as the cycle hopefully turns up soon.
Yeah, definitely. And I'm curious. So in the year maybe 1990s, so that is the time where we don't have iPhone, we don't have smartphones, we are still on dial-up internet. Can you imagine? We have 250 million internet users on Earth, and now we have 5.5 billion. So how did you get to know PayPal or X.com, to actually want to join? And, all this sending the money through the internet is such a new thing. So what bring you to this?
So I met Peter Thiel when I was 24 years old. We both had a background in the currency business. So Peter was working for a large bank in New York, trading currencies. And my first job out of college was working for effectively a currency hedge fund. And so we crossed paths through a common friend. And nothing that I knew when I met Peter, I met a really, really, really smart person. And I vowed to hold on for dear life. And so you fast forward 25 years later, literally, he's still holding on by a string. But it was one of the luckiest, most fortunate things. Most people don't get the ability to bump into someone like Peter Thiel or be able to work with Elon Musk, and the list goes on at 24. And so I just thank my lucky stars that I realized that, and I've been still holding on ever since.
I'm sure you're really humble. I'm sure you're really capable as well, to be in the circle of all these awesome entrepreneurs. So I just want to, kind of take it step by step. So, you mentioned about how you have met Peter Thiel and the other founders. And then we want to kind of know, how was it like before the merger between X.com and PayPal? We know that at the time there were quite a few coverage, about what happened before and after. So how was it like being an employee there?
So Jumat described it very well. So we were running PayPal, Elon was running X.com. This was first quarter of 2000. And it was a crazy time in the sense that we at PayPal were giving people $10 to sign up for the service. And so our burn rate, although it sounds pedestrian today, was in excess, I think, of $10 million per month, which back in 2000 was a lot of money. And we were backed. We had some great investors. Nokia was our primary investor. As we mentioned earlier, we were enabling people to send money between Palm Pilots. And I'm sure the vast majority of people in this room are too young to even know what those things are, but they were basically personal digital assistants, which essentially was a predecessor before the advent of our iPhone or the equivalent. And then Elon was backed by Sequoia and Mike Moritz, who's arguably the most famous venture capitalist of his generation. And so we were both basically in this arms race where we were going to spend each other out of business. And Elon, frankly, was probably more prominently financially backed. And so our two boards came together and had kind of a meeting of the minds and effectively forced a shotgun marriage between the two companies. And they came together, and they were pretty different cultures also at the same time.
Yeah. Was there any shift, in terms of culture in order to make the merger work? What strategies were implemented better?
Yeah, it was a really interesting time in the sense that when we started offering the email payment service, this was I think January of 2000, we went from basically no users to growing at a rate of 1 million new users per month. And so it was crazy. If you're selling Beanie Babies online and you screw up an order, it's probably not that big of a deal. If you're going at 1 million new customers per month and you're dealing with people's money and you screw something up, the next call goes to the district attorney or the attorney general, someone in law enforcement, you can get in trouble really quickly. And before January 2000, I think we literally had something like 7 or 8 customer service agents in our Palo Alto offices. And so that wasn't going to cut it when you're going at 1 million new customers per month. So as an example of how we had to kind of adopt or adjust, we had a senior woman on our executive team who was from Nebraska. And so thankfully, people may not know this, but Nebraska is very good in the sense that people speak English in Nebraska very clearly. And there's a lot of fiber optics that cross there because it's literally in the middle of the country. So we sent Julie out and essentially rented out the local Holiday Inn or whatever it was. And 400 people came through the door, and we basically hired all those people that came through the door to become our new customer service team. And I think if you fast forward to today, PayPal, if they're not the largest employer in the state of Nebraska, they're in the top 5 or something like that. But that was an example of one of these kind of crazy adjustments that we had to make on the fly in order to continue to be successful as a business.
Yeah, I can imagine. And you mentioned about how you are giving customers $10, to try PayPal, and how the customers were growing at 1 million per month. So how did you get there?
So the $10 was meant to that was really kind of the first example of viral marketing. But honestly, we stumbled into a configuration that was frankly just very lucky. So we were trying all sorts of different kind of markets to figure out what markets would best use email payments. Because when you set up a new payment system, it's very tricky because usually there's like a chicken and egg type problem. You have to both appeal to the sellers and the buyers. And oftentimes these new payment schemes appeal more to one or the other. We were very lucky in the sense that we stumbled upon the eBay market. And so the eBay market is obviously online. Yeah. It's very big. It's very dense. And most importantly, both the buyers and sellers each had a need for a better payment solution. So if you're selling a Beanie Baby, you want to get your money as quickly as possible. So before PayPal came around, the average duration of the time for a payment to settle was like 2 weeks, because you put a check in the mail, maybe it gets there, maybe it doesn't, maybe the check bounces, maybe it doesn't. So it was very complicated. And then if you're buying the Beanie Baby, you want to get your Beanie Baby. So both parties had an incentive for a better payment solution. And so we stumbled upon eBay. It took off like wildfire.
And I think maybe the takeaway for founders here is really not just, kind of growing your company organically with the resources you have, but also to look at, maybe a platform that could use your product to help grow your product more quickly. Yeah, so thanks for sharing. You have seen a lot of early stage founders grew and become successful. What are some of the hard truths that you would like to give them, particularly for early stage founders? Advice, yeah.
Sure. So I think with this cycle downturn, it's kind of a mixed blessing in a sense for people that are on the allocator side of the table. So the people that have the money, that are looking to give money to young people who are entrepreneurs. And I think, and I love talking to groups of young people and kind of address questions exactly like this, in the sense that it was really hard for people on our side of the table in those 13 years after the great financial crisis, when all the trees were growing to the sky and everyone wanted to be an entrepreneur. So as an example, I graduated from college in 1996, and all of my classmates all wanted to be, work at Goldman Sachs and be derivatives traders. Fast forward to today, or those 13 years after the financial crisis, everybody wanted to be an entrepreneur. However, it became so overblown, it almost became like a game show. It's like, where do I get on the escalator? I'll get off at the top, the confetti and the balloons will drop, and I want to become a billionaire, I won the game. It's not how that works. Being an entrepreneur is not an escalator. It's more like this. And these bits down here are near-death experiences. And some people should go work at an accounting firm and start as a junior analyst and become CEO of Ernst & Young in 30 years. That's an awesome, amazing career path. Being an entrepreneur is polar opposite. And some people just don't have the temperaments, the constitution, so to speak, to deal with these near-death experiences, because that might lead to nervous breakdowns or something else negative. And so, but that's what being an entrepreneur is like. And so some people just aren't cut out for it. So as an allocator, going back to your question, now, essentially the herd has been culled significantly. So the entrepreneurs that got into startup land, during those 13 years, a lot of them have kind of washed out, and it's kind of a Darwinian process. And so I think it's natural, and I think it's frankly good, because again, this is a really, really hard time to be starting a business. This is, to give it balance and to be positive, this is when the next PayPal or Google or the equivalent is started. It's at the bottom of a cycle when the cycle starts to turn, but it's also really hard. So I think people just need to be eyes wide open about that reality.
Yeah, thanks for sharing that. Are there any hard truths now, for investors, particularly in the early stage, that you would like to share?
So on the investor side, I work at Thiel Capital with Peter, and then I have my own fund in Arizona, Phoenix, Arizona, where I live. For me as an investor, I really focus. It's very much the jockey, not the horse. It's all about the entrepreneur. And so, when you invest in a company like a PayPal, the business plans change, 7 or 8 times. But if you invest and a bad person, however you want to define that, you really have no chance. And so trying to focus on the entrepreneur, making sure that person has the integrity and the character, the intelligence, the ability to think laterally, that's exceptionally important. And so for me personally also, and this isn't a dogmatic rule, but first-time entrepreneurs, it also involves a higher degree of kind of babysitting and chaperoning. So all things being equal, I would prefer an entrepreneur that has tried it before, even if they fail. At least it means that they have the scars and kind of they've gone through the experience and they learn from it, but they learn from it in so much that they want to try to do it again.
Sharing that, I think definitely people who are less fearful of failure, there's also, in the same category that Vertex love to look at in terms of entrepreneurs. So I'm sure you have a lot of pivotal moments during whether it's PayPal or when you're doing investments. What are some of these moments that shape you as an investor?
So I'll give an example right now in this market. It's a very difficult market from a fundraising perspective. And so if you're lucky enough to be able to find capital, I've had a couple of deals that have sailed away from us because the entrepreneur was too focused on dilution. And so there was one deal in particular about a month ago where she wanted to take about 25% less capital than we strongly thought she should. And so that means she's going to be back in the market in probably less than a year, unless everything lines up perfectly, which never happens. And so I guess the point is that in this environment, if you're fortunate enough to be in a position where you can take capital, get as much of that capital as possible, because this is rainy day time. And when it's rainy days, you want to have as much cash in the bank and not worry about dilution, because 100% of zero is zero. And I think, in Arizona, I think oftentimes our entrepreneurs don't think big enough. And so one of my favorite phrases that I borrowed from a buddy who's a partner at Greylock is that you have to have equal parts grit and grandiosity. And so grit is probably very clear, but grandiosity is super important in the sense that being an entrepreneur in a startup is so hard. So if you're going to go through this crazy amount of work, working 24/7 for multiple years, you might as well be rewarded for it. And again, the idea of being too small-minded in this very, very difficult capital environment, I think is a mistake.
What do you think about portfolio value creators, operating partners? Do you see that working well?
So I do. I think investors that are purely financial and have never been operators, and I'm obviously saying this from a biased perspective since we started PayPal, I think you have to have an operating background if you want to have an edge as a venture capitalist. It's not private equity where you can go to Harvard Business School and learn a bunch of numbers in finance and then just apply that kind of from a road method. Venture capital is very different because you're literally building companies from scratch. So I think having an operating background, especially if you're an entrepreneur and you're looking at different capital sources, I would personally be biased. And again, it's my reflection of my background, but I would be biased in favor of someone who could give me not just money, but could give me operational expertise.
Yeah, we totally agree. I think it's not just capital, being able to help the founders or the founder finding the investor, giving them help to get to the next stage or, all the way to exit is an important point. Yeah, so thanks for sharing all this. I think many people love to ask you, what are the emerging industry trends, especially right now at the beginning of the year?
When you do panels or whatever it is, you always get asked what's the hot sector or whatever the equivalent is. Mm-hmm. The honest answer, I think, is that no one knows. Peter doesn't know, Elon doesn't know, I certainly don't know. As an example, everyone is talking about AI, which I think is justifiable to a large extent. On that topic, for whatever it's worth, I think there's essentially going to be a bifurcation between two different approaches to AI. So one approach is going to be kind of the superpowers of AI. So it's going to be the Google and the Microsoft and the Alibabas and Sam Altman and the equivalent, because these very deep-pocketed groups will be able to afford the critical ingredient, which is the world-class PhD or the equivalent that is doing the artificial intelligence research. And these people are very, very, very finite number. They're probably in the thousands globally. And if you're coming from a US kind of non-China perspective, it's probably in the low thousands. And so because they're so scarce, they're very expensive. And so a normal Series A startup is not going to be able to afford these people. So these superpowers are going to be the ones that kind of push the envelope for AI overall for all of us, which is great. But that's just a different realm, a different echelon that most of us are not going to touch. The other side of the bifurcation, I would argue, is going to be, whereas AI is going to effectively become an ingredient in the recipe for most, if not all, startups. So when we look at investments from the Arizona Fund perspective, we make sure to understand how AI is playing a role in any investment that we do. And importantly, if AI is not in part of the pitch, we want to understand why that's the case, and we want full reassurance as to how a competitor can come along and figure out a way to build something with the AI ingredient. Because I think what's going to happen is that AI is going to become a ubiquitous ingredient in all startups going forward. And again, it's not going to be the same realm. It's just going to be helping relatively rote, mundane tasks get done more efficiently. And I think that's a reality that I think a lot of us, at least on the investor side, were surprised by how quickly this has come about, but it is very real.
Yeah, I think AI is definitely really of a hype topic right now. So we also want to ask you a bit about how do you manage risk, especially when it comes to technologies which a lot of people are looking at.
Yeah, so the venture model is it's very different for most asset classes. So you have a portfolio theory, you're undoubtedly going to have some zeros, you probably have some middling outcomes, but the way that you pay for your investment approach is that your winning investments really need to win. And this goes back to my comment that I made earlier, is that you can't think small if you want venture capital money. Because in order for me to make money and for my LPs to make money and for me to be able to raise my next fund, I need to have outsized return.
Very true indeed. We have come to the last segment, and it's something we want to ask you because you are an independent film investor and director. Yeah, and I think that is really interesting. We saw some of the films that you made. It's very inspiring. So would you tell us a bit, how did you get into the film industry, and tell us more.
Sure. So actually our latest film is in theaters, at least in the US, called Memory. Jessica Chastain, who won the Oscar last year for Best Actress. Peter Sarsgaard actually won Best Actor for this film at the Venice Film Festival last September. So fingers crossed on possible award nominations next week. But to answer your question in terms of how I got involved with the business, I went to a small liberal arts school in upstate New York, Hamilton College. And I got to know a fellow alum of the college named Thomas Thiel. And Thomas became very well known in the film business. He had started a production company called Legendary Pictures. And Legendary became very well known for a variety of different films, most notably the Dark Knight series, and then the Hangover series, and Inception, and Pacific Rim, and so forth. So I convinced Peter to put a little bit of money with Thomas in the early days, which is very rare for us because we're kind of a two-trick pony in the sense that we trade macro and we make private tech investments. So investing in a film company is definitely not in either of those buckets. But Thomas went on to sell Legendary. I mean, Thomas is an amazing macro trader in the sense that he kind of top-ticked the Chinese interest in Hollywood back in, I think, 2017 or thereabouts, 16, and sold the company to Wanda for, I don't know, $4.5 billion. So it turned out to be a really good investment for us. But Thomas then brought me into the fold earlier. The first film that he and I did together was called Act of Valor, which was about U.S. Navy SEALs, and we made a few more films together as well. And then I reconnected with some childhood buddies that I'd grown up with. And we've started this production company called High Frequency Entertainment. And we're shooting 3 films this quarter. We're actually shooting one film literally right now in Las Vegas called Showgirls with Pamela Anderson of Baywatch fame and Jamie Lee Curtis and a pretty good cast. So the reason I really like independent film, first of all, it's a very difficult business. And if you had to compare it to venture, my joke to my friends is that it has the same probability of being a zero, but with a much lower ceiling in terms of the positive outcome. It's a very hard business, but what I really like about it is that, tech and finance, at some point, if you do it for a while, it becomes a bit routine. Not easy, but there's a degree to which it is routine. Whereas with film, you truly are making art. And not to sound corny about it, but when you make art, it's very, very difficult.
Wow, amazing. Thank you for sharing a lot of interesting insights and stories. I think, as I listen to your responses, it's like a condensed version, distilling the insights through the past 2 or 3 decades that you've been in entrepreneurship and venture. So that's very helpful.